We're officially halfway through the month of October, and there's enough whipsaw in the stock market that it might as well be a slasher film. In this video, we're going to be breaking down everything you need to know to be best prepared for the upcoming trading week. Of course, we're going to be getting into those nerdy stats, facts, and figures for the individual trading days, but more importantly, we're going to be getting into the major news of what's playing out in the market, what's influencing it to the upside, to the downside, and really I want to dive into kind of that classic if-then statement of if this happens, then we should be pretty bullish. If this happens, then we should be pretty bearish. I want to lay out all those scenarios for you, so like I said, you are better prepared for the upcoming week in the world's largest casinos. Of course, if you enjoy these type of breakdowns, don't forget to like, subscribe, comment below. All that stuff really helps out with the algorithm. And now that I got that boring stuff out of the way, let's get into it. When the market officially closed on Friday, the result was a little surprising, especially given what happened last Friday, where the market absolutely vomited. But within 1 week, we had a little bit of a recovery. Stocks closed higher as bank credit worries and China trade tensions ease. Of course, I'll be explaining what those are, but just to give you an idea, on Friday, if you look at the heat map of the S&P 500, yeah, there's a little specks of red, but across the board, there's a lot more green than anything else. The S&P 500 had a green week, and even though we didn't make a full recovery, we're not that far from the all-time high. Granted, we didn't break down below the 50 EMA, but we also didn't recover the long-term trend line, which means that we're kind of in this weird in-between of will we or won't we, which way are we going? The NASDAQ, honestly, not that much different. Very much looks like the S&P 500. Gold did hit another new all-time high. I feel like I've been saying this a lot, but if you've been riding this trend in gold, a massive congrats to you. These are disgusting gains. Year to date, as of the moment I'm filming this video, gold is up 60%. That is eye-watering. And then if we turn our attention to digital gold, Bitcoin also looking decent. Obviously did not have the best 2 weeks, but overall still trading at 108,000. Year to date, up 16%. Similar to the overall market, looking a little weak here, but let's see if it bounces out of this a little liquidity sweep or if we're actually going to puke to about 100,000. So right now it seems like the major thing that is winning is still somewhat tech and really specifically AI. But as I said before, you have to tip your hat to what's going on in gold, an absolute insane run. Now that you have an idea of what's moving, what's not moving, and what's outperforming on a relative basis, let's dive into why this is happening. Bank worries and the China trade feud unnerves the stock market. Typical October volatility or something bigger. Obviously, this is very easy to Monday morning quarterback in terms of something bigger and volatility. It's I'll tell you when the market closes type of a deal. But right now, we have a couple things that are really from a large scale going to be massively impactful on the overall market. Of course, I'll be diving into what those are, but I think it's good to have a little bit of a foundation in terms of seasonality. Remember, from pretty much the start of October until midway through January, there's a strong bullish seasonality push, but I do want to let you know when we're in mid-October, it's neutral. There's a little bit of bullishness, a little bit of bearishness, but overall we're in that mid period where it's a little bit choppy. And this is based on the past 20 years worth of information. If you look at the past 5 years, yes, October is a bullish month and really so is November, but looking at the weekly, the upcoming week, it's a little bit bullish, and then the week after, it's a little bit bearish. So in terms of seasonality, I would say it really doesn't have to come that much into your factoring right now because we just don't have a strong seasonal bias at this moment in time, which means the real things we need to pay attention to are the major pieces of news, such as what in the world is going on with the US and China trade war. Besant and the Chinese vice premier to meet to try to diffuse escalation of US tariffs. They're meeting soon, and right after that is alleged that the president of the United States, Trump, and the president of China, Xi Jinping, will be meeting in South Korea. Obviously, it is a binary situation. Either it could all go well and the market rallies and we're the best of friends, or the talks could basically blow up in our faves, and then before you know it, the economy and thus the stock market take a sizable hit. This is a binary event. It might surprise you, but as I'm filming this, I don't have a special line to what's going on with the government, so you're flipping a quarter. I just need to put it on your radar because obviously it could be massively impactful. Moving on from that, don't forget we have our own issues here at home. The US government is still shut down. Congress is running out of time to decide the fate of Obamacare subsidies, which is really the crux of the issue of why the government is shut down and why the left and the right side cannot come to an agreement. According to Polymarket, they are pretty confident that this is going to go beyond 30 days. As of the moment that I'm filming this, they are 82.7% confident that we will be going into the month of November. And for the day specifically, Kohrs right now, the betting market is saying about 42.6 days. But I should let you know, every single time I check this, every single day, the idea of how long the government shutdown is going to last is increasing. Every single day, longer and longer and longer. Obviously, in the short term, if we figure out this government issue, that's going to be bullish for the market. It's removing uncertainty. However, the longer it lasts, people are going to get a little bit antsy. We obviously know some people are not getting paid, but don't forget the fact that the government is a large client for many private businesses. The longer it lasts, we're definitely going to be taking a hit to GDP. The question is how long, because that's going to be increasing, obviously, the negative impacts. Another thing you got to pay attention to. From there, don't forget that we are allegedly getting a lot of data drops this upcoming week. And I'm saying allegedly because some of them are going to be missing out if the government's still shut down. But beyond that, we know that we're still getting some numbers. Wednesday, we're learning a little bit about crude oil inventories. Thursday, maybe the initial jobless claims and existing home sales. And then Friday, we're supposed to be getting an idea of what's going on with inflation with the consumer price index. So that's probably the major day of the week. Make sure you mark your calendar for this Friday, October the 24th. And just when you thought the market had enough volatility with the US-China trade war, when you have the US government being shut down, well, of course, you have to add a little bit of gasoline to the fire by remembering the fact that it is, in fact, earnings season. This upcoming week, we're going to be hearing from Coca-Cola, Netflix, Tesla, IBM, American Airlines, Intel, P&G. Obviously, feel free to screenshot this. There's a whole host more of earnings. Obviously, if you're trading or have a position in these individual equities, highly recommend you pay attention. But remember, especially when it comes to the world of these big tech stocks, depending on how they are or aren't doing, that could have a huge influence, especially on a one-day performance of clearly not only that stock, but the overall sector. And since we're talking about individual equities, don't forget that early last week, we learned that some of the banks are very much under pressure for giving out bad loans. The alleged sweeping betrayal of trust that rocked Zion's bank and spooked Wall Street. In case you missed it, earlier this past week, it was reported that there were some regional banks that gave out some sizable loans that are turning out to be duds. Obviously, that's putting quite a bit of downward pressure on the banking sector, especially in the regional banking world. So that's another thing you gotta be paying attention to. As of this moment, that's all the major stuff that should be on your radar, and I know I just hit you with a fire hose of information, so let me really summarize this. Yes, pay attention to what's going on in earnings and regional banks and what in the world's happening with the US government shutdown and the trade war with the US and China. I get that that's a lot, and actually, I can make it this much more simple. On Friday, 2 Fridays ago, the market took a big hit when President Trump threatened a 100% additional tariff on China. As of now, we are still in that range. So you could be very conservative and say, hey, I'm either waiting for this breakout or this breakdown. Obviously, the bullish case to the upside, the bearish case to the downside. Another thing you could do is pay attention to what's going on in the options positioning, and you're going to very quickly realize things get bearish if we break below 6,650, and they actually get somewhat bullish if we get above 6,750, pushing this low vol point. So those are kind of the two ranges I'll be watching. They're within the bounds of this, so pretty much all the way up where my cursor is here, pretty much that high, and then 6,050, we closed right above it, so that was a win for the bulls, but granted, we're right above it. So for me, it's that simple. Either I'm waiting for that bullish breakout and I'll hop on that train, or I'm waiting for the bearish breakdown and I'm going to be hopping on that train. I don't think we have to overcomplicate it. I know there's a bunch of news and things that you might be diving into, but at the end of the day, I'll be watching where the big money is positioning itself, because obviously it's going to be big money that's moving the market. So really, if I had to summarize, we're in that awkward purgatory where we have to sit on our hands and wait for price to develop as news develops, as big money decides to throw money one way or the other, so we can get an idea of who is legitimately in control, because right now it's pretty clear that we're awkwardly in between. And I know that that's painful to say, it's painful to really experience, but sometimes the best trade is no trade at all, at least until things become a little bit more lucid. Of course, these are all my own thoughts and opinions, and hey, 50% of the time I'm right 100% of the time, so we'd love to hear from you in a comment below. Are you buying? Are you selling? Or are you just sitting on your hands waiting to see how this all plays out? Like I said, let me know in a comment below. I appreciate all the good vibes. I'll catch you in the next one. Peace.